By the way, we should have Joke Week. I'm telling you right now, we need to have Joke Week. International Jazz Wealth Joke Week. Just come as you are. We're all sharing jokes, and it's a joke. But speak freely.
It's 2023. It's hard. It's hard to.
It's a joke.
It's hard to do that. We all agree that things can be jokes.
Let's do it this way. At the end of the month or something, right? The last week of the month, we all identify as comedians. We just tell jokes. You know what I mean?
We're all comedians.
We all have a good time with a joke. Even some of them you're like at a roast. You know how hard they go at people?
Those are funny. It is funny. And sometimes they get away with saying things. That
just let it go. You know what I mean? And you're like, but even sometimes you're like, oh, okay, that one kind of hurt a little bit. But it's a joke,
People have to be able to take the joke. And I think that's the problem with where we are today.
Okay, let me know in the comments below. Should we have Joke Week where anything goes? You share your jokes. We'll share some jokes. You know what I mean? And you know what Eric's jokes are going to look like. But I got some good ones. I'm just saying.
I just think of hey, if I said a joke and my kids saw the video, I want to make sure that they're like, oh, cool.
Well, I've always had a rule.
That's not
on
saying
this
anything ridiculous.
Yeah, but I've always had a rule on this channel that is if I wouldn't show it to my kid, you got to go. You can disagree with me, you can argue with me, all that stuff, but if I wouldn't let my kids see it, okay, that's got to go. But other than that, let's have some fun.
Okay. I don't know what I would let what I would let my kids see versus maybe what you would let your kids see.
Well, you got to make that call.
There's a difference. Yeah.
Yeah, you got to make that call. My kid's an adult now, so
it's parents. Yeah. That's what we do.
But all right. Let's do this here. Welcome to FinTips, everybody. This will be a short one because I just want to make a point and share some data with you, but I don't want to seem like, God, essentially. So what I'm doing here is I want to explain why we will beat your returns every time. And it's not because we're saying we're like great stock pickers. I'm going to share the data with you. And then if you're curious if this is something I'm saying now or if it's something I've said in the past, all week, just go back and every the Jazz After Dark on Thursday night, if you go back to the closing beat, we've been talking about this. So I just want to highlight this. I'm going to start by showing our fund, and not for promotional or anything, but I just want to show it to kind of set the groundwork here because that's the easiest thing for me to pull up. So our large cap growth fund is beating the market by 3 times, just about 3 times. Not because we are great stock pickers. You could probably guess what stocks we own in that portfolio for it to do that.
Yeah.
It's just a method of, hey, we wanted a growth stock fund. We wanted to be obviously an aggressive grower. This year happens to be a little bit of a standout. Okay. Now, how do we play offense instead of defense from here? There's 2 things an advisor can do. We can say, look at us, we're heroes, and let's make a bunch of videos and show how good we are.
And get greedy.
Yeah. And we could just temporarily look like we're magic. Or we could play offense here and say, what's next? What is going to happen next? And every one of you will say, it's AI, or it's going to be consumer staples or dividend stocks or whatever. You're thinking of the individual stocks, whereas I'm thinking, and now Eric's thinking, the mechanics of the market.
Yeah.
So let's do a quick example here. I'm going to say, I'm going to pull up, now I just chose, let's go year to date. I chose the Vanguard Small Cap Index Admiral Fund just because it was small cap. And then I chose the Schwab Large Cap Growth ETF. I only chose those just so I wouldn't have the same name and we weren't promoting Fidelity or Schwab or whatever, right?
Yep.
Either way, the returns are going to look the same between whatever brand you pick. So on the screen, you see that right now, the Large Cap Growth Fund is up year to date, okay? And this is as of now. The previous slide I was showing you was as of last week, so it's a little bit of a difference there. The small cap index is up 5%. We have a big spread.
Yeah.
Okay. Let's play a game. Eric says starts the year with us. He says, I'm going to put $10,000 in the small cap fund. I'm going to put $10,000 in the large cap fund. And he comes to me and says, Dustin, I want you to keep 50% in each fund at all times, right?
Yep.
And so if they move together, we would always have 50%. However, because large caps, you guys have gone crazy and just bought the devil out of these things, that is up 30%, whereas his small cap is up 5. So we know, let's just say he has now 13,000 in the large cap, and he's got basically still the 10,000 in the small cap. Eric has a problem. He comes to Jazz Wealth and says, you told me you'd keep 50% in each one. What do we have to do as advisors? We have to sell some of this one and buy some of the small cap, right? We have to rebalance. And so we may have a deal that once a month or once a quarter, we're going to do this for him. And now, where are we? Coming up to the end of the quarter, and it's time to make these decisions. So Eric goes, hey, man, notice that I'm not 50% in the large cap. Could you address that? Certainly. We have to sell $2,500 worth of that fund and buy the small cap. Mm-hmm. Now, that's just me and Eric. Imagine millions of 401ks. How much money is in a 401k, like in the whole United States?
Yeah.
Do we know? It's like, what?
Trillions.
Trillion bucks?
Trillions.
Yeah, I don't know.
No, it's trillions, I think.
It's okay. So imagine all of that. Now, I'm not saying everybody's going to sell the large cap positions and move it all to small cap, but they do have to rebalance, okay? So what's happening now? We literally have this happening right in front of your eyes where small caps are just taking off for no reason. Nothing has changed, but they're taking off. And yet what's happening in the NASDAQ? What's happening in large cap stocks? They're flatlining and they're starting to sell off. You're not going to see it plummet because we don't need to sell a lot of that, right? We just need to take some profits and rebalance into small caps. So if you're looking at the Russell 2000, even over the last couple days, why is it up 1 or 2% a day? That's a monumental move for the small caps.
Yeah, it's jumped.
It's rebalancing. That's what's happening. Now, to prove a point.
Ooh, prove the point.
Let's prove that point, baby. Let's zoom out. And I'm just using the Vanguard small cap and Schwab large cap, okay?
Yep.
So right now, we have a divergence. We know we need to rebalance. Where do the rebalances take place? They take place in the month that you have that rebalance. So, for example, if I go back over here, we say, when does this rebalance? This was the last time there was a spread there. When does that take place? Right before the end of the quarter, January, February, March, right? Right before the end of the quarter, what happened here to this small cap fund as it got to be a little spread from large cap? They rebalanced. The money came out and money went into large cap. Let's go back a step further. What happened here? There's a divergence. In this case, it was the small cap versus large cap. December. What do we have? October, November, December. That's the end of the quarter there. Money comes out, it goes in. Go wherever you want. Look over. In this case, it's large cap was outperforming. In the month before the end of that quarter, in this case, the end of the year, money comes out, rebalances, and in this case, everything fell, but money comes out, right? So you keep looking back. Look back wherever you want. Here's the end of the last month for the end of the quarter. Money comes out. We rebalance. Go back over here. Wherever you want to go. Money comes out before the end of the quarter. Do you think that this time is not going to be different? It's already happening.
Yeah.
So why our returns will always beat yours is because we're playing offense for that. That has nothing to do with picking stocks. We're already ahead of the game. We're already enjoying that small cap bounce, and it just is going nuts here at the moment. And so it's purely like looking at the mechanics of the market rather than saying, I think that Plantair is going to keep going. I think that's a good stock. Or that Apple with the new goggles that they have. Oh, that's something else, man. That's going to grow. We don't, for this moment, we don't care about that.
Yeah.
We care that we know that there's going to be rebalances. There's just no way around it. A lot of you have it automated, right? Once a quarter, 401ks do that.
A lot of those. Yep.
So what happens to you? You go rebalance.
Robo-advisors, same concept.
Robo-advisor, all that stuff.
They sell it like crazy, the whole deal.
The one time a quarter, the other advisors do work, I don't know. But so what happens to you? You're at the end of the quarter. You're too late, right? The rebalancing is already taking place. I just showed you numerous times where it takes place in the month as we end the quarter, just as we get through that, like, for example, March 7th, 8th, and 9th, as you saw on the screens there.
Yeah.
That's when it happens, because that's the big guys, right? That's the people that are like, I'm managing money for a $50 million account. I'm going to get ahead of this a little bit. Meanwhile, your automated rebalance takes place at the end of the quarter. Look at what's happened to the Russell 2000. It's already up. right? You're already missing that rebalance there.
Already making the shift.
Yeah. So with us being there, understanding the mechanics of the market, that adds that extra alpha, in this case, how they say it, but it's just added returns. Now, to be totally fair, we're not going to get 100% of that. That would be like timing it perfectly, right?
Yeah,
but
not trying to time it.
Yeah.
But you got to be smart. You can't ride a wave and realize that you're just going to think the wave's going to always ride.
And that's okay. I've never really been emotional like that. Like, if a stock goes up, I'm like, I'm good. I'll just get out. And if it goes up further, it's like, it never really bothered me. But in this case, if I can say that we're getting 50% of that extra move there, okay, that's something that other people aren't getting. The rest of the world is not participating in that. And I'll bet you prior to watching this, you didn't even know that that's how it worked. So now you have that extra like knowledge, that heads up of when there's a wide divergence, there has to be rebalancing. It just is a fact of how the markets move. When we rebalance, where's the money going to go? In this case, it's really obvious because small caps have just kind of flatlined all year. So
I'm just envisioning everybody's out there and they're like, all right, yep, I see what he's saying. We're just gonna like move the markets on this. Like everybody's gonna shift.
Yeah, if we were like that popular,
make the shift. Yeah. Well,
but it doesn't matter because you're just blending in with all the other rebalancing taking place right now. So and plus, we don't have that kind of money to do that. No. But that's how the mechanics of the market behave. And it had nothing to do with me saying we'll beat your returns every time because we somehow know the magic stock or whatever.
You should buy these specific stocks. I mean, honestly, you're looking at just a basic rebalance model there,
which makes you wonder. Let's say Warren Buffett or all these people, are they great stock pickers? Or do they understand the mechanics of maybe how to analyze a stock fundamentally? Like, oh, this company is going to grow because the stock's going to grow because they're rebuying shares, like he's doing with Occidental Petroleum. Mm-hmm. He flat out said they're rebuying their shares, and until that changes, I know that's going to cause the stock to go up.
Yeah,
my man's made a bunch of money.
Yep.
So it's don't put your mind always around that person is good or bad because of their stock picking, unless it's Jim Cramer because that's what he does. And by the way, well, I mean, statistically, he does better than the average. But
talked to somebody the other day, and they're like, "I followed some of his stuff, and dang it, I've always lost." And that's like,
it's a tough one. But he's a stock picker, so he has to live and die based on picking stocks. We manage retirements, so we live and die based on literally just making it grow. That's all we care about. We don't actually grow as a company unless we grow your account. Yep. I don't care if I have to get ahead of a rebalance or participate in Microsoft that I just so severely overbought. I don't care how I have to do it, but if that added tool is available where your advisor understands, well, that's how the markets work. This is going to happen not because of a belief because I woke up and had a dream about some stock, but this is how it works. So we better get ahead of that, right? That's it. I rambled. I stole the show, man.
No, I like it. No, I like the idea and just the basic breakdown of it's not, hey, this stock, that stock, we need to buy these two because this is where things are going.
Yeah.
You start chasing the trends, it could work in your favor, but any little slight hiccup in that trend, something going on, government regulation, we've seen that right now with a lot of different companies, all these cryptos out there and stuff.
Yep.
I mean, government stuff that comes into play, it will, your little trend can easily become
just like that
short-term fad, and then you're out.
And I was just talking to a client yesterday that was like, large caps are killing it. I'm thinking about scaling more in.
Yeah.
And I'm like, well, okay, so normally I'm fine, ride the momentum, but we know that trend is about to come to an end because of the timing. It's about the end of the quarter. So you're fighting all that money that needs to come out, not because they hate large caps, but because they need to rebalance. Or they have to send you your quarterly statement showing you that they did not do what you said you wanted them to do.
Yep. No, yeah, it's all in the agreement there.
I get fired up about this stuff, man.
Ooh, I like it. All right, so every morning I announce that I'm going running. But I don't run. It's a running joke.
Okay. Yeah. Not your best. Not your best. I had two.
Okay.
Potentially.
I always love yours because you actually pull them from like good comedians that are pretty funny. I mean, I will give you that, and as long as you keep them, not joke week.
One of them I think I'll have to save for joke week because I don't think it'll pass our internal censor here. So I'll go with What do you call a woman that's good at darts? Amy. That's like your thing, huh?
Yeah, that was good. I was thinking like Darth Vader, but that's not Darth Vader woman. Doesn't make sense.
There's something there, though. I like that one. The other one, I will refrain. Just
okay, yeah.
keep everybody happy.
I really appreciate that, and so do all the listeners that are sitting there streaming this right this second with their kids sitting beside them.
We'll give you a pass on that one.
Thank you.
All right. Thanks for joining us today. I hope you learned something. Most importantly, watch that, right? As you go forward, learn from that. Know that this will happen again, and you can participate next time instead of sitting there wondering why things changed.
And there you go.
Adios.